overbought and oversold. So this strategy is called a divergence strategy, and what we do is we use the fib extension levels, the 127.2 and the 161.8 fib extension levels to establish when markets are likely to be overbought and oversold. Now the example that I'm going to use today is going to be the pound yen. It's a really good high probability strategy, really easy to use. Let's just have a look at this. I want to make sure that everyone is able to hear. Yeah, that's cool. Yeah, that's all right. Good. Right, yeah, so let's get this over here. Let's pull this up. So what I've done is I've got a pound yen, and this is the range. So you can see the way that the price started to move up, and then we've had a bit of a pullback. So this initial pullback, again, the divergent strategy uses a lot of, uses fib levels, so Fibonacci levels. So what you have here is, this is the initial move up. So what we'd have is a 4-hour time frame, and you could see that we've had a pullback looking for around the 50% level. So you can see it's about 50%. Came down, tested that area, and then started its move up. So once it started making its move up, we wanted to see if it was going to go and retest the previous high. So as it starts to make a move up here, we've got nothing on our charts except for maybe a few trend lines, and we want to use the fib extension levels like this, find the high, find that last swing low, which is down here, and basically look at how it extends up to key level, key fib, which in this case we got up to the 127, and we started seeing some divergence down here. So this is our volume indicator. So what you do is basically look for divergence. So look for sudden burst of volume to correspond with this move up, which is really nice, and that all makes sense. And then we want to see, when it breaks out, we want to work out, how high is this actually going to go? Is it just going to keep going up and up and up, or is it going to find some, is it going to top out after making a high? Is it going to, where's it going to extend to? And are we going to keep looking for a turnaround? The idea being that we will look to enter either the 127 or the 161. So in this case, we initially looked for that 127 as the first entry point. It didn't quite touch, so it wasn't really valid. The first target would then be back to previous structure, back to the 100%, pretty much where we've broken out from. So that's where we've broken out from, and we're basically looking for it to flick up and then pull back and retest the previous structure. Didn't quite get there, so it was a bit of a fake one. Didn't quite get to confirm this one, and it didn't quite pull down. So we're using EMAs to keep us in on this uptrend. This uptrend wasn't finished, but what we did see then was a sudden burst up to around 13974, and that is the 161 extension. So perfect how it's worked. From there we've had this wash and rinse kind of a move, big massive burst of movement up, and then as it hits, that's when we start getting in for our entry point. The good thing about the divergent strategy, encompassing the overbought and oversold price action, you can see that here the first push up gives us the volume, then we have a bit of a pulls back, and then the second wave of burst of volume to the upside comes up to retest the previous high in terms of volume, so it comes up to retest the previous high here, but you can see the volume wasn't quite there, it wasn't as high as this volume, so it was less. So this is when you start seeing divergence, because although this is saying yeah it's going up, the reflection here is that it's actually topped out and it's starting to go up, you know, it's going to start to go down. It's not making new highs. So whereas people could start going in, retail traders or whoever might start to come in here, start buying this up, thinking, oh wow, you know, we're going with the trend, which is great. You're going with the trend is your friend. Start buying, taking longs at the breakout, etc. It's broken out there, it starts going up. Fantastic. And we're almost, you know, we're almost at that fib extension, and then it's going to go up a little bit more maybe. So once you make your money on this bit here, is it going to keep going? Yeah, it's gone up, you can make your money, but then you've got to know, obviously you can't just hold longs because you think, well, there's divergence, is this going to be sustained? How high is it going to actually go before it runs out of steam and turns around and drops and goes back? So it's really important to understand that. So this is why we use divergence and start looking for entry points. And this one, because it touched it to a T, this is when we started looking for shorts. Now, even if you don't get in here at this exact level, because it could be at a certain time of the day when you're not around, or you know, it could happen at any point. It dropped back, it came back to retest, and it started its move down. But when it started moving its, you know, making its move down, then you could start to say, okay, this could be the possible trend change. So where's our confluences? Okay, so the 161 extension, it's done that. Okay, there's the entry point, is going to be anywhere up here. Stops can be considered slightly above, just above 140 round number, because you know it's a, you know, psychologically it's a nice big round number. So there's your second confluence. We're overbought here, we've seen divergence, we're going to start dropping. And if it starts to drop, then you know that there could be a possible trend change, and your first target is going to be 13575 in this case, which is the it's the 100%, back to the 100% as the fib extension. So that's pretty much what we were, you know, targeting, and that's how we would play it. So until it gets to that point, we just keep shorting. So you know it's going to keep shorting, then our indicators start to change. You know, indicators are always a little bit lagging, but they help to establish where we've overbought and oversold. So that's how the divergence strategy works, and that's how we use it, and that's how that's, you know, it's very powerful. So you often see people, traders, trying to buy and sell, call tops and bottoms, and then they find, you know, they'll try and call a top, for example, thinking, okay, start shorting here, and then it busts up and stops them out, and then it drops. You know, maybe the signals weren't right, it wasn't quite ready, so you'd have to wait for that to set up. So this helps, the divergence strategy really helps. And in this instance, if you'd gotten in, let's say you'd gotten in perfectly at the top at say 139.70 for argument's sake, you could have taken it down to 135.70, and that would have given you 400 pips. It was a nice 400 pip move. This is a 4-hour chart, so this topped out on Friday the 5th of June and eventually came back to our T1 Thursday the 11th of June at 4 o'clock as the Asian session was finishing and the start of the start of the London European session was commencing. So you can see that, you know, it was the first target, and then we dropped to the 76 and pulled back up, and so that's how we would use the fib extension. So I wouldn't necessarily have these on there, so I would maybe take these off. Don't need that, don't need the 50, don't need the 61.8, don't need the 382, and don't need the 76.4. Just need to look at the 127.2 and the 161.8, and also I have the 176.4. What we try and do is sometimes you know, sometimes it's not an exact science, so sometimes you have this burst of movement up, and it may just spike on up into this area here, like, so we call it a little zone, and then it may drop off. In this instance, it was just perfect the way it went up, tested a 161 perfectly, and fell away. But it's, as you guys know, as traders, it doesn't always perfectly hit. But so that's why we allow a little bit of breathing space, wiggle room, as it were. So if it started to consolidate, decelerate up here, then you know you'd put your stop just above the 176 and short it and get in for a decent short back down, and you would be ultimately targeting that 135 area. And if you do this on a high time frame, like in this instance, this is a 4-hour, but if you did it on a 1 hour, for example, it's very powerful. It's good for intraday trades, so you could maybe from the extension all the way down to from the extension all the way down, back down to the 100%, it could be something like 30 pips or 50 pips or 70 pips. But so that could be your T1. But the great thing is that this is probably the trend change. Often is on the higher time frames. So use the 4 hour and the daily. The higher the time frame, the more powerful. And what that means is that, okay, you have a T1, maybe 30 pips, back to the 100%, back to previous structure, back to where it broke out from. That's providing support. But then if it continues to go down, that suddenly becomes resistance, and that 30 pips then starts, it can escalate into you have a T2, and so then you start looking for maybe a 100 pip move, 150 pip move. So you basically saw and correctly identified, with the help of this strategy and using divergence, when the market decided to change direction. And so that's why the divergence strategy is so powerful and so useful as a tool, because it helps you to identify when to call the tops and the bottoms, when to know when the market is possibly changing. So if we come here now, what we have here is we have divergence to the downside. So we've had this move down, we've had this extension. So now what we would do is we want to take that away, and we want to use the fib tool again, and we want to see, right, where is the start? It's about there. And so where's that low? Okay, there. So is it going to make a new low? Yeah, it did, but it made a new high. So you can say, right, where's the lowest point? So there's the lowest point. Where's the highest point? There's the highest point. You don't need the fibs in between, because we're not looking for the 61.8 or the 50% or any of them. We're actually looking for the extension levels. So the 127.2% and the 161.8%. And we use these in conjunction with other confluences. We don't ever just use these on their own. And basically what you're seeing here is the price action. So if you're in at the top here and you're looking, following this downtrend, we've had a pullback, you think, okay, where's it going to extend to? We've got divergence, so look for a 127 extension. So your first target would have been 132.72. So you could have said 132.70s, and you saw this move here, look, sharp candle, great. Okay, so that's the move, and it started to bounce off that fib extension. But we've been so bearish the last few days on the pound since the Thursday's Bank of England news that it's continued to go down. But you could see if you were shorting to the fib extension, that would be your first target. So whereas we used it before to gauge the market going up, and you could get in and go long, at the same time you could look to go short at those perfect fib extensions. So it tells you when the market's likely to change. In this instance, we're looking for the market to continue down, so we can use the fib extension tool to gauge how far it's going to extend if it breaks out of previous structure, previous low, and there's your first target. What else do we have? We have a trend line, a daily trend line, so you know it's going to come back down. So we've had a bit of pullback and it's broken down through, so we're looking at 131.70, so around 131.70 almost got there. So maybe it will gap down tonight when the market's open and get into this zone. And what with the divergence, you may well start to see a good place to start buying the pound. In this case, pound yen. So if tonight the market gaps down at the open and it leaves a gap to the upside, what with it being already extended and what with us seeing divergence here, the volume being less than this initial bit of volume, see the volume to the downside, it's running out. So could be that's when you start looking for the move back up, and you'd start looking for a potential move back up to say 133.50, the previous structure, and then from there we could see this sort of a move like this before we have another leg down. So we could have this move up here and then see another leg down. So this is why these fib extensions are really, really useful, and the divergence is really, really useful, because it can help you sort of gauge, where's the market likely to turn. It could do that. retest the previous structure, so you could get in on a counter move, or this could be the start of another move long, and then if it fails there, then we could see another kind of like move like that, etc., etc. So it just helps you with your trading, with your entries and your exits, and it really does, it really works. Divergence is amazing in terms of monitoring volume and seeing just for yourself when you can get in and when you can get out, and when's a good time to enter and when's a good time to exit is powerful, because otherwise you could end up over trading a move, where I've seen so many times with traders, what they'll do is they'll be scalping the move, okay, and this, the move moves a lot more than they anticipated or they allowed, and they snatched the profit perhaps a bit too soon. Fair enough, okay, or maybe they took the profit and they were happy with their profit, but then they see the market continuing to move in the direction that they were initially going, so it's still going, and they think, okay, it looks like we could squeeze a bit more. Great, so you want to jump in again. This is when the problems arise, because when you're jumping in again and again and again, you know that this move may be over soon. You know that you've only got a certain amount of time. So not only have you got a certain amount of time, but you need to know, when is it likely to turn around? When's it, is there going to be a change in sentiment? Where's that likely to happen? So you need to look at where the divergence is. You need to look at the volume. If the volume starts to run out, starts to diminish here, and we've already extended, then you know that you shouldn't be shorting here. Shouldn't even have any shorts on here. Unless, of course, you were holding over the weekend anticipating further bad news and spikes in the corona cases, which, again, that's fine. So you could probably say, okay, this may spike down to 131 area, but then it may start to go up. So that's how we use divergence, and that's how we use our divergence strategy. Now, in terms of the rules for the strategy, okay, so this is, let's get it up. Let's open this up. All right, so there. Divergence, the middle one. We'll cover the other strategies next week and a week after, but this one, basically, we use the awesome indicator. So this indicator down here is called the awesome indicator, or a variation of this. This one's slightly tweaked because it's our software, but it is basically an awesome indicator, which you can find free and available on every charting package. And then what you find then is, with the awesome indicator, you use it on a 1 hour, 4 hour, daily, weekly, monthly time frame, looking for the divergence. You're using the 3 key fib extension levels for entry and stop loss. So if you were shorting off the 161, you'd put your stop above the 176. So sometimes it can really help and say, okay, well, I only need to risk like 20 pips or 30 pips, because the stop's so small, because you pretty much getting in at the right level. Your entry is what you often see people say, sniper entry, because you've pretty much gotten in at the right time. So when you see people getting at the right time, it's like, well, how did they know it was going to turn there? Well, this is how you do it. You use a number of confluences. So T1 is always back to the 100% level. So that is pretty much previous structure. So T1 is always back to the 100%. So if you're getting at the 127.2, you're looking for it to go back to the 100%. In terms of pips, that will vary because it depends which time frame you're using. The higher the time frame, generally the bigger the move, the bigger the range. So the potential for a bigger target, which is great. So you saw here on the 4 hour on the pound yen, you're looking at about 400 pips from the 161 extension, because it went up to the 161. So it was fantastic. It gave us another couple of hundred pips by going from the 127 to the 161. Much like the 764 strategy, this could be the start of a trend change. So when you're calling tops and bottoms, this can really help you get into the markets. It's something that you just need to take away with you, and you can ask us questions, and you can try and spot the divergence, and you can share your charts with us. Maybe share it in the private chat group that we have, and anyone can join that who's a serious trader, and you can just share with us, and share your charts and screens, say what you think, and just back test and try them out, and you know, keep testing, keep looking for it. It's very powerful. And then, you know, what you found here is, you know, what have we done here? We've done it here as well, haven't we? Here we go. We've done it there on the 1 hour. So this one is where we've broken out from 133.50. We've extended to the 127. It's a little bit more detail. Consolidation there. So it's acknowledging that 127. And is it going to go back up and retest that area? No, it didn't quite get there. Did we have divergence? Yes. Now we're seeing it. We didn't quite have it here, but now the volume has started to come down here, and we're starting to see divergence, mass divergence at this 100%. So what's it going to do? Well, it can extend down to the 127 point to the 161, and you know, if I just squeeze it up, there we go, 161 and 176. So come down into that zone, and with divergence we may well, you know, if it gaps down at open tonight, we may well then see the start of a move back up. So this is pound yen, so the reason we're using that is because it's current, it's live, it's actually happening, and there's potential for a trade, and you know, we're giving you a potential trade setup. Seeing a lot of divergence on the 1 hour and the 4 hour, and so potentially could be a good entry point. So keep an eye on a pound yen tonight, and you may find that you might make some money buying it, particularly if it gaps down. And just to confirm as well, look on the daily. Let's pull up the daily just to show you where we're at on the daily. So we've basically retraced 50% at the moment, 13189. You know, we're pretty much there now. Gotten down to about 94, but we're pretty much there. So just yeah, just wait and see if that's the start of 50% retrace. If you want to look in a little bit more detail, you can then say, okay, let's find the high. I'll use the 4 hour chart. Let's find that low point there, last swing low, take that high where it started the high, you know, there's the high, there's the low, there's that range currently. Where's it extending to? Oh, it's extending down to our magic 76.4, which we have a strategy for that as well. So the good thing about our strategies is that often they can overlap. So sometimes it becomes really powerful as a high probability setup when we have maybe 2 of our strategies crossing over and they're both setting up. So in this case, high probability is that it could come down to the 76.4, which is at 13175, and see a bounce there. Daily trend line being tested, you know. So there are multiple confluences, multiple reasons to be in a trade. Potential here for some buying, especially if it gaps down. So hope that helps, hope that makes sense. And yeah, if you have any questions, now's a good time to ask. We can record this session and we can go over it, or you can go over it and just see for yourselves what you think, and if it's something that you might be able to get your teeth into.